going on, you guys? Oftentimes you hear a ton of hype around Airbnb investing. Tons of people on TikTok and YouTube talking about it, including myself. When push comes to shove, a lot of Airbnb investors, especially newbie Airbnb investors, fail. So in this video, I'm gonna run through why people fail and some of the top mistakes that are honestly easily avoidable.
I will not fail.
Number one is not understanding the actual market that you're investing in. What location is it? What is the demand like for that market? And why are people visiting that market?
Back to the drawing board, I guess. Or not.
Are you just investing in your own town because it's convenient? What you guys should be doing is evaluating markets across the country to figure out why people are visiting, what the seasonality is. That's another big mistake, is people to understand that cash flow can vary drastically in certain markets between maybe winter, summer months, spring and fall as well. So you need to do some homework. Use sites like Airdna. I use this site all the time. If you guys want to check it out, I'll drop a link to Airdna in the description below. But Airdna is a direct data pull from all short-term vacation rental data for markets across the world, really. And you could dive into trailing occupancy rates for the past several years or the past 12 months, average daily rates. You can even carve out and use filters to look at specific property types. So I only want to look at 3 bedrooms that sleep 8 to 10 people and how much revenue are those properties bringing in over the past couple of years. And you can look at each month and see how the seasonality affects that particular market. You also need to look at year-over-year growth in tourism. You can honestly just Google search a lot of this type of information. Some markets will have more fruitful data than others. But looking at tourism growth, for example, if you look at Nashville, you can see steady tourism growth over the past decade, and I don't see that trend stopping. You can also look at growing markets, so not just growing in tourism, but are those markets growing? Are people moving there? Is the price of real estate increasing steadily over time? Because you also want to capture any appreciation that's equity in your pocket to keep over the long term. Number 2, and this is probably the most critical mistake most people make, is not understanding the investing metrics behind the actual investment of a short-term rental property. It's a lot different than traditional investment properties, right? You're on a lease agreement, you have a steady stream of revenue coming in every single month. That's the exact same every single month. And then you have operating expenses, which are relatively linear over the course of time. With short-term rentals, it's very different. We have to do our best guess to forecast average daily rate through a given year and then the average occupancy rate through a given year. Like I said earlier, depending on the market and the seasonality, this is going to fluctuate during busy seasons or slow seasons. Some markets have much more drastic swings in occupancy and average daily rates. But you multiply those two numbers together, right? Total days booked per year, which is your occupancy, and your average daily rate, that gives you your forecasted revenue for that property. And then you have your operating expenses, which ranges from taxes, insurance, utility bills, and when you actually record revenue and your bookkeeping, you're actually going to account for all the cleaning expenses too, which can range drastically depending on the size of the property. So there's a lot more moving parts and a lot of things to consider, but the most important thing is understanding the investing details. If you guys are doing a buy and hold investment, how much do you need to put down? If it's 10% down on a secondary home loan, if it's 15 or 20% down on an investment loan or a commercial loan, and then you also need to furnish the property, which we're going to get into later. That's also going to cost money out of pocket. So you really have to understand how much it actually costs to acquire the asset and then what the forecasted revenue and expenses are, ultimately giving us an estimated conservative cash flow per month. Now, the most key investing metric that we need to understand in real estate in general is cash on cash return, which is the total annual cash flow we expect to generate with this particular property divided by the total dollars invested out of pocket. Now, in traditional real estate world, we're looking at an 8 to 12% annualized cash on cash return. In short-term rental world, my minimum requirement is 25%. But for a lot of new investors, they just pick a property in a market that they heard was a good market, and then they stand it up and they don't really understand the actual return on investment. How hard is each dollar you invest working for you? So that is why we look at cash on cash return. Number 3 is furniture. Honestly, a lot of investors will go bare bones with furniture and just stand up as cheap as possible.
Now, why would you do that?
But this can actually be detrimental to your overall cash flow and return on your investment. Because if you're just going bare bones with furniture and there's no way that you can stand out from other properties, then people are going to pass up booking your place. It's a highly competitive space with Airbnb. Not only that, but budgeting how much it actually costs to furnish a property, whether it's a studio apartment that you're furnishing or a 5-bedroom, cabin in the mountains or beach house. It costs quite a bit of money to furnish a place, especially to furnish it well in a way that you can stand out. So understanding the general cost of how much it would be to furnish that place, if it's not a turnkey property, meaning it comes with furniture, it's rent ready, going to be crucial, because the last thing you want to do is spend a bunch of money on the investment, right, with your down payment, closing costs, and things of that nature, and then come to realize that it may cost you $30,000 to furnish a 4-bedroom house when you only budgeted 10 grand for it. So understanding that ahead of time is crucial. This is crazy to me because a lot of people will stand up a property bare bones and then take photos with their cell phone or not hire a professional photographer to really take amazing photos. Airbnb is no different than, in my opinion, social media, TikTok, Instagram, YouTube, and alike. It's all about click rate, right? How long can you grab someone's attention? How do you earn that click to get to the Airbnb splash page where they can actually learn more about the property? That the first photo you have on your listing is most critical. And then once you get to the splash page, you have 5 photos to earn the extra click to see the rest of the photos on the property. So how do you stand out? In my opinion, you have to create 1 to 3 Instagrammable moments within the house. This can be anything from an interactive mural people take photos and share with their friends and family on Instagram or other social media platforms. You want to create memories for people. It's not just a hotel looking for a place to stay.
Look at the detail. This is beautiful.
You know who your clientele is, and then you can cater that experience to whomever that may be, whether it's groups of friends, bachelorette or bachelor parties, or if you're looking for family vacation spots. Outside of an interactive mural, I think a huge opportunity is finding a place that has a really fun outdoor entertainment space where maybe you could do a fire pit, string lights, make it look really nice. Have people see themselves staying there and having an amazing time. Create that emotional appeal before they ever click book. One other thing to think about is like easy ways to stand out. Change out light fixtures or fans. Instead of just the basic things that most houses come with, throw some cool lighting in there, whether it's Edison lighting, warm up the room. You can do accent walls, whether it's the living room, kitchen, especially in bedrooms, like right behind the headboard of the bed is oftentimes where you could put wallpaper or a different color up and make the room pop and stand out a little bit instead of just the bland, whether it's a white paint or tan on most typical houses. And this is a mistake, not that we made, but we actually did try it a few times, and this is cleaning the Airbnbs yourself. This is very intriguing to do because you can save a lot of money and honestly boost your cash flow if you clean yourself, but ultimately we're trying to create financial freedom of time, not just have a second job. And it takes a lot of work to clean a place. I do encourage you guys to clean your Airbnb at least once to understand what your cleaners go through on a daily basis. Honestly, it opened our eyes to make sure we're paying them extra and tipping them when they do a really great job. But if your plan is to scale beyond just one property and scale to multiple properties, which trust me, after you get one property that's cash flowing thousands of dollars per month, you're probably going to be intrigued to get more, 2, 4, 10 properties. Once you scale, you have to have a team in place that can operate, while you are not spending your time at the property. So not just cleaning, but also maintenance services. You have to have those people in sync with your properties and automate it as much as possible. So instead of just texting your cleaners or emailing them a schedule every time you get a booking, you can actually integrate calendars directly with Airbnb or VRBO. We use an app called Your Porter, which helps automate a bunch of other stuff. But it directly syncs our calendars with theirs, so they know when we have bookings, how many guests are staying there, when they're checking in, when they're checking out. So that's all automated in the background, and the cleaners show up without us having to remind them, which is honestly critical as you scale your business. Is automation, and this is one of the biggest mistakes we made personally. We avoided a lot of these mistakes. We did a lot of research up front, but this is something that if I had to start all over again, I would do this immediately. Even if you only have one property, automation is key. So instead of paying a property manager, typically they charge 20+% of top line revenue. I've seen as high as 40% of top line revenue to manage your property, which is crazy because nowadays you don't have to have somebody sit in an office with keys to the property and have a management team actually there where guests can need them to check in, right, to access the property and get information about the house and the location. You can do all that through technology. We use an app called Your Porter. You can also use one like Smart B&B or Guesty. Basically, this is a property management software. Now, property management softwares do a whole slew of things and they get better each year. But for your porter, we like for a few different reasons more than the other ones. But the main one, which all of them pretty much do, is automated calendar syncing across platforms. So if you're in a market where you list on Airbnb and VRBO and maybe even booking.com or other sites, they will sync calendars and handle messaging from the one central location. So when you get a booking on VRBO, it'll automatically block your Airbnb on those same dates so you don't get double booked, because that can be a major headache. Secondly, you can automate messaging with your guests, which Airbnb actually just launched their own automated messaging tool, which is great. But on your portal, you could do it cross-platform, so also on VRBO. This is amazing because this is what burnt so much of our time initially, was having canned messages for check-in and check-out instructions, copy and pasting, and setting reminders to send them manually, which was a huge time suck for us. So once we learned about these automation tools, it was a no-brainer. You can have all these canned messages, you schedule them exactly when you want them being sent. So we have check-in instructions being sent 2 days before. We also have like a reservation confirmation. As soon as they book, they get some details about the house, check-out instructions, house rules, all that stuff. Your porter we like because it will actually auto-review guests on your behalf if you want them to. Most guests are great guests. You can override this function if you have a bad group of guests and want to leave a different review, but it leaves them a 5-star review and helps automate that part of the business, which is crucial in boosting yourself in Airbnb search, because the more you review guests, the more they're going to get reminded by Airbnb to review you as the host in your property. And the more reviews you get, the more positive reviews, it's going to boost you in Airbnb search or VRBO search alike, which is ultimately going to start this perpetual cycle of getting more clicks and more bookings at a higher rate further out. You can also use physical tools to help automate your business. So instead of having a normal deadbolt with a key, you can have a keyless entry that's a keypad. So in the check-in instructions, you give them a code to the house. You can even use a tool called Slage or Slage, I forget how to pronounce it. And this is a lock company, but it integrates with your porter. So if you actually want the code to change every single guest, your porter will change it for you through a Wi-Fi lock, and it will send the new code to that guest every time. You can sync your calendars directly from your porter or Smart B&B with your cleaners, which is awesome. So again, if you don't just do it directly through Airbnb sharing the iCal link, you can do it through here, and you can do more things through here as well. You can send them SMS, like texting, or email, or both. You can choose what information you want them to know about each guest reservation, like the guest name, how many guests there are, check-in, check-out, all that stuff, but it helps streamline that process. The next tool that has been a huge time saver is called Price Labs. And this helps automate pricing, because if you only let people book, let's say 6 months in advance, anything beyond that 6 months is not going to be booked. But as soon as those days become available on your calendar, Airbnb is just going to show your base rate, which is not good, because you need to change pricing based on time of year, day of week. Every location, right? The seasonality is different. So Price Labs is awesome because you can set a whole bunch of different customizations. You can set seasons. You can set different prices per day of week, like pricing adjustments per day. Like on Monday, I want to charge 20% less than I do on my base rate for Saturdays, for example. You can do minimum stays on different tiers, like 5 days out, the minimum stay is 1 day. A month out, the minimum stay is 3 days, so on and so forth, if you want to capture longer bookings further out in the future. And then Price Labs will actually change your pricing for you on a daily basis based on local demand, and they color code your calendar so you understand if there's high demand, normal demand, or lower than average demand. So it'll help you capture more money during maybe dates that there's a concert nearby that you had no idea 3 months out there was a concert, but maybe everyone's looking to book an Airbnb during that time. So Price Labs will capture that and change it for you. And same in the reverse, right? If the demand is really low, it will lower your prices to help capture those bookings where you may ordinarily be priced out during those dates. Not having a pricing strategy. I see way too many rentals, especially in traditional vacation markets like beaches, mountains, and lakes, that charge the same amount every single day of the week, and oftentimes the same amount every single day of the year. This is a huge mistake because most people are willing to travel more during weekends, holidays, summer months, and things of that nature. So what you need to do is use Price Labs, set up your customizations to charge more on the busier times of visitation from tourists, right? So typically that's Thursday to Sundays, mostly Friday to Sundays, and then during the summer months you could charge more and then charge less during the week. Because what you don't want to do is miss out on charging more during the busier days and then also miss out on bookings, as we mentioned before, talking about Price Labs, during the middle of the week or during slower times. So having a better pricing strategy strategy is very, very critical. You guys need to really treat this like a business because it is ultimately a business, right? You guys are generating revenue, you have expenses, you're paying cleaners, you're paying maintenance, and ultimately you have cash flow coming in after all those expenses are paid. So I encourage everybody to work with a CPA come end of year, come tax season, to really get an understanding of what you're allowed to write off, because you're allowed to legally write off certain things against your income to reduce your overall tax liability. So when it comes to real estate, there's a lot of awesome tax advantages of making these types of investments. Additionally, you're going to want to consider an LLC structure at some point down the road. Maybe not with your first or second rental, but some people choose to do that before they make their first investment. Some people choose to make it after their first few investments. For us, we just finally set up our LLC structure, but I'm not a lawyer, I'm not a tax or law professional, so I always encourage you guys to work with a lawyer and a CPA who focus their business on real estate investors. And then of course, I encourage everyone to set up a separate bank account for each rental that they have. In Airbnb and VRBO, you can designate which bank account each payout from each place is going to. If you partner with somebody, you guys can have a shared bank account. You can also split the payments directly through Airbnb to 2 separate bank accounts. There's tons of ways you can go about this, but you want it to be as clean as possible, really to have good bookkeeping, so you guys can track all your income coming in, all your revenue, and then all your expenses and ultimately your cash flow, so you can present that in an easy to look at format for your CPA come tax season. It'll make their job a lot easier and ultimately help you guys make sure you're reducing your overall tax liability wherever possible. So those are the top most common mistakes I see new Airbnb investors make. Honestly, many of them are easily avoidable. I think the biggest one or 2 mistakes that you guys need to avoid are the first 2 I mentioned. So that's learning how to evaluate markets and learning how to evaluate properties, individual properties and different loan options that you have. If you're doing Airbnb arbitrage, which is basically renting a place on maybe a 3-year corporate lease agreement and then subletting it out on Airbnb, understanding those numbers and what your key investing metrics are, understanding what cash on cash return is, and then what makes a good investment from a poor investment. It all comes down to the numbers. That also helps de-risk the investment as well. So numbers don't lie, right? So lean on that as much as possible. You guys have any questions or comments, please drop them below. I love hearing from you guys and I love answering those questions. If you aren't subscribed, consider subscribing if you want to learn more about achieving financial freedom through real estate, Airbnb specific topics, and other things related to personal finance. But I hope to see you guys again sometime soon.